Today I'm going to show you a trading strategy that helped me make my very first $100,000 as a trader. But long before I ever got to that $100,000 in trading profits, this strategy would give me something that would be much bigger than that. Because this was the first trading strategy that I ever tried that gave me 3 consecutive winning days in a row of $1,000 each day or more in profits. Now, I know that does not sound like it's bigger than $100,000, but let me tell you what, it certainly was for me, because where I was at mentally and emotionally with trading at that point, I had never had 3 straight winning days of any amount whatsoever for over 5 years. And that is not a joke. In fact, throughout that 5-year period of time, there were several months I didn't even have 3 winning days for the whole month. So to have 3 straight winning days of $1,000 or more each day back to back to back was like the most emotionally gratifying, rewarding, and confidence building moment I've ever experienced in trading, still to this day, 26 years later. And the reason for that is because up to that moment in time, I didn't believe I belonged in the trading business. I had nothing to show that I earned a spot where I am at. And this was the first strategy that absolutely helped me break through those barriers. So what I want to do in today's video is share with you this trading strategy in the attempts that wherever you find yourself in your trading journey right now, and whatever that barrier that you may have in front of you that you keep smacking up against over and over again that's holding you back, maybe this strategy can give you the confidence you need to take that next step and just get over that barrier and just move on. So let's go ahead and get started with today's video. Now, the reason this strategy worked out so well for me and why I hope it works out well for you too is because to its core, it's just too simplistic for anyone to mess up, even the rookie trader. And I'm not kidding when I say that, because all we're really going to be doing here is we're just looking to buy into weakness on strong assets and sell into strength on weak assets. That's all there is to it. And even if you don't understand what I just said, I promise we're going to start real slow. We're going to keep this thing simple, stupid, and go one step at a time. And by the time this video is over, you should have a pretty good understanding of what I'm talking about here. So the first thing we need to do is understand, what do I mean when I say a strong asset, and what do I mean when I say a weak asset? So let's go ahead and pull up the charts we're using. And the first place that we need to start is with a daily chart. So you'll see for today, I have the daily time frame selected. And for now, I'm using the stock Apple. It doesn't matter what asset we're trading, whether it's foreign currency, cryptocurrencies, oil, gold, future stocks, doesn't matter. But we do need to begin with the daily chart because most of this strategy revolves around the signals we get from the daily. And the first thing that we want to do here is we want to find our indicator menu and we want to select the moving average symbol. And once you select that, it's going to put a line that overlays on top of that daily chart. The next thing you want to do is make sure that this line is set up properly. You're going to go over into wherever the menu is and click on the settings. Some brokers will already have it set at certain levels. This trading view has it set at 9, but we want to make sure this length is set to 50. So we're going to begin by using the 50-day moving average. Just click on that, hit OK, and it's going to give you a new line there on the chart. Now, once we have that line set up on our charts, we can move to the next step, which is understanding what does that 50-day moving average mean on our daily charts and how are we going to use it when it comes to this strategy. And we're going to keep this simple as well, and it goes just like this. If the asset you're trading is above that 50-day moving average, most likely that asset is under accumulation by funds and institutions. And what that means to you is bulls are in control of that chart and should be given the benefit of the doubt. And what we should be thinking here for all of us when it comes to this strategy is 80% of every idea that comes out of your mind should be a buy side or long trade. So we want to buy assets and continue to buy assets that are trading above the 50-day moving average. If the asset you're trading happens to be below that 50-day moving average, we're going to inverse that relationship. That would normally mean that institutions are actually distributing and selling this asset, and you would like to sell this as many times as possible, especially into strength. So if you see an asset that's underneath a 50-day moving average, you should be thinking 80% of the time, every strategy that comes out of my head should be to the sell side. Above the 50-day moving average, we want to look to buy. below the 50-day moving average, we want to look to sell. Now that we've determined if the asset we are trading is above the 50-day moving average, we should be buying it. And if it's below the 50-day moving average, we should be selling it. We now can move on to the statement that I made at the very beginning of the video, which is the core of this strategy. And that is we are looking to buy weakness on those assets that are trading above that 50-day moving average. And we're looking to sell strength that is on those assets trading below the 50-day moving average. Pretty simple stuff. Now, the question here is pretty obvious. What do you consider weakness on those assets and what do you consider strength? So let's move back to our charts and I'll show you. We're going to go back to that daily chart. We're going to go back into our indicator menu and we're going to look for and select the average true range. Don't do anything to this indicator, just click it and go with the default settings and you'll see it will put a line at the bottom of your chart. Now I've done a ton of videos already on this channel about the average true range. Those who watch it know how much I use it. So I'm going to post a couple of other videos. If you want to take a deep dive on this subject, feel free to watch those when this video is done. But just in case you don't know what this number means, if you look over to the right, you're going to see it's just about 481. Let's just say 5 to make math easier. That means if you are trading Apple on a day-to-day basis, you could expect either a $5 move up or a $5 move down any given day. Now, this is a valuable tool for us traders because it sets expected value and is very good for exits and stuff like that and targets because it lets us know if the trade we're going to make is worth it in the first place. But to stay on point, here's what we're actually looking for. Once we've determined, let's just keep 5 in the top of your head. Let's go to another chart. And I'm going to move down to a smaller 5-minute time frame. Again, I mentioned earlier that as long as it's 1 hour or less, this is where we're going to dial in our entries and exits. What I am looking for is any continual pullback or sell-off, continual meaning directional, that is at least 20% of that daily range. So to make that simple, you take the $5 daily range, multiply it by 0.20, it's going to give you $1. We just need a $1 continual pullback somewhere throughout the day to reverse and stay with the trend. So let me show you exactly how that works. Notice here on this 5-minute chart, Apple opens up and it gets pretty strong. Now we're going to move a couple of bars forward and just stop. Notice that we have this continual pull from the open print down towards this base. If I grab any measuring tool and I grab the very top of that wick down to the bottom price point, you'll see it says $2.29, which is well in excess of that 20% $1 barrier we were looking for, correct? So that's far enough and deep enough to be considered a valuable pullback for this strategy. So this would be something that we're looking to buy into. Now from there, all we really need to do at this point is pick the perfect entry. So now that we've seen it move back, it's above the 50-day moving average, we're looking to buy it. We have in excess of a 20% pullback in a continual direction. Now it's just a matter of time for looking for the right candlesticks and the right setup to trade this and make the entry. Now, this is a very important part. Don't skip over it, definitely, because it's not uncommon that these things can go a little bit lower. All we really need to see to keep it simple, I know I talk a lot about John Wick candles and power towers, but all we really need to do to keep it simple is we just need one of these 5-minute candles right here. Just one to close above the other. If you're looking for the easiest, the most safest entry, wait for the candle closure. Now, there's definitely other styles of strategies there, but for this video, let's just go with candle closures, okay? So all we need is one of those 5-minute bars to close. So I'm just going to move it a couple of candles forward, and let's stop it about right there, okay? So if you kind of look, here's why it's important for the newer trader to look at candle closures. Notice that when we pulled back here on Apple, we did get into support. Now, this is not a support resistance video, but that certainly helps the accuracy of this. Now, I want you to look here, and I'm going to open up this chart because I think this is a very important part. Notice that every time you got down into this 240.50, you found a buyer, you found a buyer, you found another buyer. But here's why we really need these candle closures, especially for the new trader, is because notice that this candle right here just punched through real quick, but didn't close. It pulled back, leading to the next candle being red. right? This candle didn't quite get above that, almost, but didn't quite, and the following was red. It wasn't until you got to this very candle did you get a clear and definitive candle break. Now, ultimately in a chart like this, it didn't make any difference whatsoever because your stop would have been under the low of day, which we'll talk about in a second. But for the newer trader, that kept you out of the trade for about 30 minutes, and maybe that would have caused you some sort of mental damage up there, right? So this is where the entry would be. Let's just grab this long position tool. The entry would be right there. The stop loss would go underneath the low, and we would be looking for a full retracement or 2 to 1. I'm going to move this over so you can see exactly what we are looking for. But just for this example, we'll go 2 to 1, moving back through the high of the day. So if I just kind of play the tape forward, you'll see that this eventually works its way all the way back up and well over that high. But the only reason, of course, if you guys ever remember the check mark strategy, right? This is what the check mark strategy was based on too. But the only reason that that was a high probability trade is because it was above the 50-day moving average. Now, one thing before that, I just want to go back and show you something I think is going to help a lot of you new traders. And it's this. These moves that you see down towards the bottom, this is a very important candle right here. Maybe just screenshot this. This is why the strategy works so well. It's because actually what this is a trap. It's making everyone feel like this is going to break down and go lower. This is why we always say never short at the low of the day and never buy at the high of the day. Because if you bought at the high of the day, the thing sold off, right? And then if you shorted at the low of the day, it rallied. That's the point. Markets are set up to perform that way, and that's why we need to use this strategy. Hopefully that made some sense, but that's the reason why Apple had gone higher. Now, all we got to do to go to the sell side is just flip that thinking. Let's take a quick look here at a chart. I've got AMD selected, my intraday 5-minute chart, and you'll see below is the daily chart. So first, we take a look. Is it below the 50-day moving average, this blue line? The answer is yes, which means AMD most likely will not hold its rallies because it's being distributed currently by funds. The next step is to take a look at the ATR, and you'll see it gives us a number of 6. So real quickly, let's do our basic math. What is 20% of 6? It's $1.20. So if there's any continual move up of $1.20 or more, that's the trade we're looking for. So if I grab a measuring tool and I take a look at this move we currently have on it, and I measure it down to its origin, which is right here, you'll see it is $2.71, which is far in excess of the $1.20, which means it qualifies for a potential reversal sell side candidate. All we need from this point is what? Pretty simple. Just one red candle that takes out a previous green candle. So I'm just going to fast forward this here. And right there, you'll see is your very first break of the candle. So in this case, what I would do is the exact opposite of Apple. We'll grab our short position tool. The entry would be right there at the base of that candle. The stop loss would be above the high of the day. And then we would look to retrace either 2 to 1 or 50% of that range, somewhere along that line. And that's the trade that you would have with AMD. And if I play this forward, what are you going to see? AMD finds its way all the way back down to the very base of the range. But the inverse relationship there to Apple, the only reason that trade became a high probability trade is because AMD was trading under the 50-day moving average in the first place. So if you just use that 50-day moving average as a guide, you're going to get a long way in your trading career. Now, I know you guys understand this whole entire trading process because it's pretty simple, right? Step number 1 is if it's above the 50-day moving average, we want to buy it. If it's below the 50-day moving average, we want to sell it. Then we want to use some sort of measuring tool via the ATR to make sure that there's a continual move of at least 20% of whatever the daily ATR is, right? No problems there either. And then the last step, of course, is a candle that gives us that entry signal. So I know you've already got that. I know you're on top of this, and I know you're excited. And all you really need to see now is some live trades, right? So we have ourselves a candidate that fits the strategy, which is the NQ futures. And all I want you to do right now is just take a look at the chart, even if you have to stop and pause here, and tell me what it is that you see. It should be pretty obvious. Now, I'm also kind of rushing fast here because I'm trading in a live community right now, but I just kind of want you to look at this chart. So let's go from top to bottom and walk through it real quick. If we first start out with the daily chart, you are going to see that the NASDAQ futures are trading above the 50-day moving average. And what did we say about the 50 moving average? We want to look to buy in situations like that on dips. Now, what we have to determine here is the quality of that dip. So if we take a quick look here at the ATR, it's telling us that the NASDAQ currently has a 321 point move up or down each day, or that's what its ATR is. So again, if we come back here and we measure the very top of this move to the bottom of this move, that's in excess of the 20% of that 321. I think you can figure that out. So all we need to do here is make sure we have a candle closure. All right, so I jumped forward here a little bit. We do have our candle closure. You'll see right there above the break of that candle, that is the entry. Below the low of the day, below of that double bottom support, that is going to be our stop. Now, our target is going to try to get about half of the range from the very top part of that chart down to the bottom of that chart. Let's just let the trade play out, come back and visit it. So for the sake of time, I jumped ahead. Also, I got really busy there with the live community, and I apologize for not getting more of this on film, but I think the point is proven. You see it has moved itself up. It's over that 50% threshold. This trade is looking good. At this point, it's just far as management, probably going to take a percentage of this profit, but I just want you to take a quick look at that chart. It should be pretty obvious at this point what that chart did. Okay, so I apologize for this one. I'm a little bit late, but I'm already short here. Visit AMD. Again, take a look at the chart real quick, and I think you can understand that. I'm also trading in a live community, so I apologize. So let's go through this real quick. Up on the screen, you're going to see the daily chart there on AMD. It's underneath of the 50-day moving average. And we've already established if things are below the 50-day moving average, we want to look to sell them. Now, if we take a quick glance at the average true range, we see that that's about $6. Now, if I measure this move from where it started to where it is now, it's clear this is in excess of that 20% threshold. And all we're looking to do is take a stop loss above the high of the day and try to get a retracement of that range. It's that simple. Okay, so I wanted to jump back here real quick on AMD. Truth be told, I almost forgot about this thing. It's taken such a long time, but I think the point is proven. The reason that AMD faded and was unable to build on that second parabolic is because of that 50-day moving average. I mean, it really isn't that complicated. So when we look back at these charts, just remember that simple 3-step process. If the asset you're trading is above the 50-day moving average, in most cases, it's going to be bought. Rallies will sustain themselves. If it's under the 50 moving average like AMD, chances are rallies will fizzle. Those rallies will be used to sell positions. And all you really need to do is use the ATR to measure that move and then use the candlestick for the entry. It really is that simple. And you can see with just 2 trades how effective the strategy can be when done correctly. So my friends, that's going to conclude today's video. And I hope you found some education, some enlightenment, and definitely a tiny bit of entertainment in this whole thing. And you can see the value of how this strategy can maybe help you get to the next level. As always, I want to remind everybody that every week my wife and I put together a free watch list market report. It's called the Gains Guide. We send it to your email inbox every weekend so you are prepared to trade each week. So if you're looking for quality trade ideas, you're looking for quality levels, you're looking for assets that are trading consistently above the 50 and below the 50-day moving average, make sure you fill that out. The link is down there in the description box. It's totally free. It's just a way that we pay back the community. Again, I thank you very much for your support, for watching this video. Take care, trade well. Until the next video, guys, cheers.